Hello dear students, welcome to Devika's Commerce and Management Academy. So related to the amalgamation, introduction is over. Hope you got an understanding. Today we will see journal entries, how to pass the journal entries. In fact, we have to pass the journal entries in the books of transferor and also transferee. Very easy to pass the journal entries. Did you remember realization account in partnership? Same type of journal entries we have to pass. Here also we are going to open the realization account. Assets, liabilities, expenses, etc., whatever we have done during the partnership problems, realization account, what we have done, same thing we are going to do. So very easy to remember. Now right now today we will see journal entries in the books of transferor. Okay, amalgamation journal entries in the books of transferor company. As I told you, X company, Y company is there, C company purchased. So in the books of X company and Y company, who is selling? Transferor means who is selling. So in that company we are writing the journal entries. We are passing the journal entries. Different transactions are very easy to remember. I'll make you to understand. First one is for transferring the assets to realization account. Assets we have to transfer. Isn't it? Which company it is? Transferor company. So they are transferring the assets to the other company. So when they are transferring all the transactions, they write it in the realization account. Transferring the assets means realization account attached to various assets account. Transferring the assets, it comes on the realization account debit side. Did you remember realization account? Realization account. Transferring the assets to various assets. Assets comes on the debit side. Okay. In the same way, transferring the liabilities to realization account. Liabilities also we have to transfer. Assets transferred on the debit side. Liabilities credit side. Anyone can say so. Each liability account debtor, provision for doubtful debts, if it is given, that is also to be transferred. All the liabilities along with provision for doubtful debts to realization account. It means credit side we are going to write various liabilities, various assets, various liability. Easy to remember. Debit side, here we are writing realization account attached to various assets. Here various liabilities including provision for doubtful debts to realization account. Easy to remember. Now third one, for purchase consideration due. This is due. Purchase consideration due. Who has to pay? Transferee. Who is purchasing the company? Transferee. No, transferee has to pay. For due, transferee company account attached to realization account. Whenever due entry is there, from whom you have to get, that company or that name will be debited. So in the same way, transferee company account attached to realization account. This is due. When purchase consideration receiving, for receiving purchase consideration, always due one entry, actual whatever you are receiving, that will be another entry. Now for receiving purchase consideration, when you are receiving, what do you do? How you are receiving? Through a bank account attached. If you are receiving through shares, then shares to transferee company account attached. If you are getting cash or bank, that is debited. If you are getting shares to transferee company, from transferee company, no? So shares to transferee company account attached to transferee company account. This is for receiving. That was due. This is receiving. Able to remember? Next one. See, for the sale of assets not taken over by the transferee company. Most of the assets taken over by the company here. Liabilities taken over by the company. Which company? Transferee company. Here, some assets are not taken over by the transferee company. If assets are not taken over, for that one entry, bank account attached to realization account. Realization account, credit side you are going to write. If assets are taken over, debit side you will write. Assets not taken over, credit side. Opposite, very easy to remember. In the same way, for payments of liabilities not taken over by the transferee company, not taken over. Taken over credit side, not taken over debit side. So you are writing on the debit side. Realization account attached to bank account. Here bank account attached to realization account. Quite opposite. Or in the same fashion you can remember, taken over realization account attached to various accounts, not taken over. Here various assets we don't write, bank account attached to means we are converting it, we are taking care of the responsibility of the assets which are not taken over by the company, transferring company. So that is why we are saying bank account attached to realization account. Liabilities which are not taken over by the company, then opposite to this, realization account attached to bank account. Up to here clear? Very easy. If you understood now, these entries are quite damn easy. Now you see second next to seventh entry for expenses, realization expenses. During the realization some expenses will be there. If realization expenses are there, who has to borne? Sometimes transferor, sometimes transferee. Both cases are there. Like in consignment also, consignor used to bear the expenses, consignee used to bear sometimes. In the same fashion here, a bit in the seventh one, if expenses are borne by transferor company, if transferor, in the books of transferor only we are writing, right? So if expenses are borne by transferor company, then we will be writing on the debit side expenses. So realization account is debiting, realization account attached to bank account. Okay, expenses for bearing by the transferor company. If the expenses are borne by transferee company, this is debit. If expenses are borne by transferee company, here two cases are there. Transferee company is bearing the expenses, means in transferred company, why to write the entry? Why to write? In what way it is concerned? So that is why case number 1, no entry, will not write any entry, because it is borne by the transferee. They'll write one case. No, I want to write. This is second case. If you want to write, you need to pass two entries. You need to pass two entries. One is transferee company account attached to bank, means payable. Okay. Second entry is when paying, bank account attached to transferee company account. Payable, payee. What does it mean? This entry, A bit and B bit. So both the bits are showing that this is cancelled. Bank debit and credit is cancelled. And transferee company also debit and credit cancelled. Means entry is cancelled. Rather than that, better to not to write entry, no headache. If expenses are borne by the transferor, then only we have one entry, realization account attached to bank account. If expenses are borne by the transferee, no entry. Better to remember this one only. Clear? Related to the expenses. Now coming to the next one. For transfer of preference shares to preference shareholders account. Shareholders account we have to transfer preference shares. How do we transfer? Transferring to the preference shareholders account. So preference share capital account attached to preference shareholders account. Transfer preference shareholders account attached to preference share capital account. Sorry, preference share capital account attached to capital account to shareholders account. Preference shareholders account we are transferring. If you understand, this one is also same. For transfer of equity share capital and also accumulated profits, both. Accumulated profits we generally link with equity share capital, that is why equity share capital is linked with accumulated profits. Both we are transferring to the equity shareholders. When we want to transfer, same like preference share capital account, in that place you are writing equity share capital account at if any accumulated profits are, that is also we are debiting, because both we are transferring to the equity shareholders account. Here preference shareholders account, equity shares account attached to equity shareholders account. Here sorry, preference shares account, share capital account attached to preference share holders account. In the same way here, equity share capital account attached to equity shareholders account. If at all accumulated profits are, that is also to be transferred along with the equity share capital. Clear? This is transferring of the preference shares, transferring of the equity shares. Right. Next one. For transfer of realization profits. After preparing this 9 entries, after passing this 9 entries, we'll be preparing the realization account. If you get a profit, it will be on the debit side. You know it. Same like partnership. If you get a profit, debit side. So for that you are passing the entry. For transfer of realization profit to equity shareholders. Profit is there, we are transferring to the equity shareholders. So here what do you write? Realization account attached to equity shareholders account. Profit if you get, it will be on the debit side. So this is transferring to the equity shareholders account. So this is debit side, no? So realization account attached to equity shareholders account. If loss, reverse this entry. Loss means it will be on the credit side. Credit side. It means equity shareholders account attached to realization account. Reverse. Clear? Then last entry. For payment of preference shares, preference shareholders or equity shareholders, whoever it may be, same entry. If you are making payment to preference shareholders or if you are making payment to equity shareholders, whoever it may be, if you are making payment, they are receiving, right? Preference shareholders are receiving, means debit the receiver. So in that fashion we are debiting whoever is receiving, debit the receiver. So if preference shareholders are receiving, debit the preference shareholders account at R. If equity shareholders are receiving, equity shareholders account at R, debit the receiver. Credit side, what do you write? All the payments. Credit what goes out. You know the accounting rules. So how you are making the payment? Something is through the cash or bank and rest of the things are through the shares. However you are making payment, that comes on the credit side. Am I clear about this? For making payment to the equity shareholders or preference shareholders. Whoever is receiving, debit them. Equity shareholders account at R or preference shareholders account at R to bank or to shares in transferee company. Who is giving this shares? Transferee company. That's all. Very simple, easy to remember. Copy this and by heart it. First I'll take a screenshot. If you understand this, we'll work out some problem so that you will not forget. Next class, if I teach you journal entries in the books of transferee, you may get confused. So we'll give a gap, then after that we'll go for journal entries in the books of transferee. Now learn transferor. Clear na? So write a notes, by heart it, learn it and come back to the next class. We'll work out the problems. Stay connected. There are many subjects which already covered in our channel. Okay. So good luck. See you.